Hello, everyone. This is John Thomas, the Mad Hedge Fund Trader, broadcasting to you live from Silicon Valley, California. And today I'm going to talk about Dow 40,000. Here we come. Yes, that is my forecast for 2021, and it's not based on any wild assumptions, but hard facts and steady analysis of the economy and the stock markets. Why listen to John Thomas? Well, I have 50 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, a little brief timeout as a Marine combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, then 5 years fracking for natural gas in Texas, and I've spent the last 13 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who is still working. My family origins are very humble. I grew up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood, playing Little League baseball and later becoming an Eagle Scout. There wasn't much to do in the old days in California but to go hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiner. There's one of the first papers I delivered covering the Kennedy assassination in 1963. Wasn't long before I found the stock pages, bought IBM at $20, sold it at $30, and suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I'd earned enough money to fly to Europe. By the age of 17, I'd visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. There, yield didn't mean interest paid, but millions of Russians killed. I didn't see a future in that, so the government sent me out to Southeast Asia for a few years of intelligence missions where I learned to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. And that's me with the Republic of China Army. Of course, in those days, doing research meant carrying a 45 caliber Sten gun, which reliably jammed on every 6 shot. After 10 years of government service, I ended up with this box of medals here, which I pull out once a year on Veterans Day. As the war wound down, I became a foreign correspondent for The Economist magazine in London. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. Ta-da! As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. If you're wondering why I'm so skinny in this picture in Beijing, it's because there was a famine going on where 50 million people died. I don't think the Chinese ever owned up to that. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund, and that's my old Morgan Stanley ID card. Yes, I know you're saying the years have been cruel. And that's me losing the Japan National Karate Championships. Word to the wise, don't ever enter a karate final with a broken wrist, which I did. I did make the finals, though. I rapidly became the top hedge fund manager of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to do things like fly your own private plane around Europe, buy the latest hot car, go marlin fishing in Mexico, and collect vintage Rolls Royces. That's my 1925 Silver Ghost at the Pebble Beach Car Show. I sold my hedge fund in 2000, retired to go into the oil and gas industry. After making a killing there, I missed the stock market and started the diary in 2008. I now spend my days pursuing my first love, finding winning trade alerts, but I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. The only problem this year is I haven't been able to visit the one in Switzerland because Americans there are banned because of the pandemic. Seems we're the most infectious people in the world right now. And I've quit turning millionaires into billionaires. There's far more satisfaction leveling the playing field for the average guy and teaching them how to trade, and that includes you. If I can take a $50,000 account and turn it into 500,000, that is more job satisfaction than I could ever get anywhere. However, every silver lining has a cloud. On my 2019 tax return, I had to pay 5.7 million in taxes on 15 million in trading income. And all I can say is I thank God I can pay that amount of money in taxes and it doesn't cause me to cut my lifestyle as it might have done in an earlier day. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it's probably me. Let's see. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to wounded warriors. When wildfires hit in California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. So there is a method to my madness. 2021 could be the best year of the decade for stocks, with the Dow average 40,000 within reach, and that is up 35% from current levels. A perfect storm of positive economic conditions will trigger a massive increase in stock earnings and multiples and prices. 2020 was only a short-term dip in a 20-year bull market that may have another decade to run. Most pandemic business activity wasn't lost, but only deferred, leading to an explosion in spending in 2021. Many domestic recovery stocks have barely moved in a decade and now have explosive upside potential. Reopening stocks like Disney, Boeing, airlines, hotels, and cruise lines have already had huge moves off the bottom, but still have much to run. 2020 will be a year to be fully invested in 100% risk on. Don't use last year's playbook. New sectors will take the lead in 2021, and I'll talk about those in a minute. If you're wondering why I was in such a good mood in that last slide, it's because I was flying a P-51 Mustang. If you don't know what that is, this is my friend Geraldine, who I usually fly about once a year. Corona update. We are now seeing exponential growth of the disease. Pfizer, Moderna, and AstraZeneca vaccines put the end of the pandemic in sight, and there are vaccines from 3 other companies to come. Details are not known, like the effectiveness in a large population, side effects, the need for repeats. We'll all be the guinea pigs for these tests, as most safety concerns have been thrown to the wayside to get this vaccine to the population in a hurry before more people die. Average people like us won't see it until the summer. 500,000 healthcare workers, 1 million teachers, and 4 million military will get priority, and that's not to mention other U.S. government employees. U.S. cases have topped 12 million, deaths at 270,000, and are still rising at 1,200 a day. They could reach 300,000 by year end. Center of the epidemic has moved from the northern Midwest to the North Dakota, South Dakota, Montana, Wisconsin, and other hot spots. The non-mask open bar states like Florida are getting hit the hardest, where the death rate is 5 times what it is in California. This is how we're getting to 200,000 cases by the end of 20, and it looks like we're going to hit that huge number far earlier than I expected. And this is where the infections are. Obviously, infections are where the people are, the population is. But California is getting off light because we have the strictest shelter in place and lockdown requirements. The historic antidote is here. The government has already implemented the greatest economic stimulus in history at $6 trillion, and more is in the pipeline. The Fed has unleashed the greatest quantitative easing in history at $8 trillion, increasing all the global QE of the past decade by 50% in one shot. When people come out of lockdown, they will engage in the greatest spending binge in history, igniting the next roaring 20s. Most consumption hasn't been lost, just deferred. That will create the strongest economic growth in history and will last for years. Stocks will rocket. So let's talk about stocks for a while. Uncertainty is gone. The election is over, and investors are happy to look through to the other side of the pandemic, and they're making their bets right now. That's why we've risen 4,000 points in the Dow in the last 3 weeks. It's one of the sharpest up moves in history. After some much needed back and fill, stocks could add another 10% by the end of 2020. Tax loss selling is gone. Republican control of the Senate makes a substantial tax increase next year impossible, so really is no reason to sell. Reopening stocks have soared while stay-at-home stocks have crashed. Economic recovery stocks have only just begun a prolonged multi-year bull move. Pfizer vaccine means that high-touch stocks like movie theaters, gyms, cruise lines, concert organizers will be back in business by the summer. Use every dip to buy. It's 100% risk on market. In 2021, both tech and recovery stocks will run, meaning essentially everything goes up. Now, you may say stocks are expensive now, and on a 30-year PE multiple basis, they are strong. They are expensive, but they're cheap on a 3-year view. Remember, the pandemic has greatly accelerated economic evolution, technological progress, and a result, the earnings outlook for many, many companies is far greater than it was only a year ago. That justifies paying up for stocks now. This is our view of the S&P 500. We nailed the bottom at 3,200 in the S&P 500 for the last half of the year. We got the major breakout after the election, and we are looking at 500 in the SPY or 5,000 in the S&P 500 by the end of 2021. Most forecasts for the stock market for 2021 are wildly underestimating the potential. The best way to play next year is with a barbell portfolio. That means putting half of your money in big tech, 50% in domestic recovery stocks, including railroads, couriers, banks, construction, and credit cards. And my guess is that the stock market will spend the entire year rotating back and forth between these two sectors like a ping pong ball bouncing back and forth. NASDAQ certainly was a place to be this year, and it will also be the place to be next year. I think by the end of 2020, NASDAQ could hit 18,000 or roughly up 50% from the current level. And you can see the blue boxes indicate where we got buy and sell signals from our in-house proprietary algorithm. And I'll talk more about that later, but we got a buy back here in June, a buy again at the end of September, short-term sell right here, another buy right before the election. We caught that massive upside explosion. We're looking to buy on any dip in NASDAQ, targeting 18,000 in a year. Microsoft, of course, big lead tech stock. Their cloud business is growing by leaps and bounds. Blowout earnings. We're looking for $300 next year in Microsoft. Look to buy the next dip. You have a potential 50% return on Microsoft in 2021. Apple, 5G fever is here. Over 1 billion iPhones worldwide need to be replaced. That is a lot of iPhones. You can see we've been buying Apple all year since the pandemic bottom. We bought it here, we bought it here. Short-term profit at the beginning of September, looking to get back in on the next dip. We're targeting $200 in Microsoft in a year, and that is roughly a 40% return. Amazon taking over the world, as we all know. They will become the first $3 trillion company, probably happen sometime in the first half of 2021. You can see we were buying it all the way up, took profits at the top, got back in right before the election and looking to buy on this dip. We're targeting $5,000 a share in Amazon. PayPal is the touchless payment star. A lot of companies are going to PayPal only or credit cards only to avoid touching anything and picking up a virus. So again, we got lots of buys on the upside this year, huge profits this year, and that movie will keep on playing in 2021. We're targeting $300 a share in PayPal. NVIDIA, it's one of our 10 baggers. They are the AI and graphics card leader. They really are in the sweet spot between AI, gaming, and cryptocurrencies. And NVIDIA, it will become the next trillion-dollar company. We originally recommended it at 600. It made it up to, at $60, it made it up to 600 in 4 years. And we're looking for another double here to make it to $1,000 a share by 2021, assuming they don't split. Salesforce, of course, the entire world is moving to the cloud. Even bricks and mortar companies are moving their business to the cloud. And that has been a major winner for us this year. We look for it to continue next year. We're targeting $400 a share by 2021. Second half of the barbell, and this is the new portion of our strategy, which has only come on board the last couple of months. It bets on a domestic recovery in 2021. Upside potential in 2021 is far greater for domestic recovery stocks than tech. Some of these stocks have not moved for 5 or 10 years. It focuses on economically sensitive cyclical industries, makes a great counterweight to a high-tech technology portfolio. We could spend all year rotating between the two groups. And there are a lot of stocks in this group, many which you have not heard about for years. They've all been forgotten for a very long time. Of course, one of the favorites is Boeing. Went from 450 down to 100, actually got down to about 90 at one point. Now that the 737 MAX is flying again, the stock's on board for a major recovery. We're targeting $300. This could be one of your biggest gainers next year. Of course, we were playing from the short side for most of this year, but we got a strong buy signal right before the election, got almost a double in the stock because of that. We're looking to buy dips now, 2021 target, $300 a share. JP Morgan, we think the banks are about to enjoy a new renaissance thanks to modestly rising interest rates, a recovering economy, and a shrinking default rate on their loan. We, of course, played the short side for a couple of years on the banks. We're now buying dips. Got a major blowout on JP Morgan, and we're looking to keep buying there. We're targeting $150 a share in 2021. Let's see, let's take a look here. Okay, credit cards, we love credit cards, and not just Visa, but also MasterCard and American Express. Again, it's a touchless play. A recovering economy leads a big increase to the overall volume of transactions, but there's also a big shift going from physical money to online purchases. Of course, you need a credit card for that. So we love Visa and our major buyer of dips there. We're targeting $300 a share by the end of 2021. Railroads, remember those? Those are the things that go choo-choo. The industry is consolidated so much, there are only about 6 left in the United States. Of course, when the economies recover, you have to move a lot of stuff, a lot of big stuff, a lot of commodities. Also, recovering relations with China mean that you get a big increase in east-west traffic, which goes to the West Coast ports. So we're a big buyer. We've already made a lot of money on Union Pacific. We think we get another big move, another 50% move next year, targeting 300 in UNP. Retailers, remember fashion, remember clothes, remember what those used to be. You may be forgiven for forgetting since you've been living in a sweatsuit for the last 9 months. And we're all wearing our 2019 clothes. So yeah, big recovery in retailers, the ones that don't go bankrupt. This will be one of the survivors. We're looking to buy on dips here. Buy calls, we're targeting 60, which is a double there. And you can see how the domestic plays will bring in much bigger returns than tech next year. Package deliveries, recovering economies ship more overnight packages. Surprise, surprise. That means UPS, the US Post Office, and FedEx. Looking to buy dips there. We're targeting $200 a share for UPS in 2021. Okay, where are we now? And guess what happens in recovering economies? Smaller companies do better than large companies and therefore have stock prices that rise much faster than large companies. The move has already started. This will continue for a couple of years, looking to buy the dips. The Russell 2000, we're targeting 250 in 2021, up from 176, and we're looking to buy the dips. Bought the dips here in the summer, bought it again in the fall, and we're buying any dip we can get our hands on right now. Okay, that's enough stock talk for a while. We cover all asset classes, and another big important one is bonds, and there the short sell of the century is in play. Vaccine assure a 2021 economic recovery and vast demand for new borrowing, both from the government and the private sectors. 10-year Treasury yields are now flirting with one-year highs. Record strong economic data is pushing up interest rate and crushing bond prices. Bonds have been in a sideways trend for all year. They're now in a new downtrend. Inflation is failing to show. U.S. Treasury Bond Fund TLT could plunge from $180 all the way down to 105 in the next 3 years, taking interest rates from 31 basis points we saw in March all the way up to 3.25% in 2 years. Bottom line, sell short every major rally in the TLT. And this is our TLT. This is like having a rich uncle that writes you a check every month. We've been every single spike, we've been selling short and making money hand over fist, usually getting around 2 round trips a month. You can see we sold the spike here, covered here, sold here, covered here, sold here, and we're looking eventually for a 140 price in the TLT, down from 160 today. Here's the yield chart, and you can see we're on the launching pad for interest rates. We have 85 basis points. The 10-year Treasury today, we see that going up to 125 sometime in 2021. So great short play for bonds. Foreign currencies, we see we got a short-term pop thanks to all the vaccine news, but longer term, the dollar has had it. Most foreign exchange plays are poised to break out to new all-time highs. Any dollar rallies are temporary and short-term, and a crash is imminent. Euro rallies back to the top of the range. Aussie dollar is maintaining highs. Bitcoin is taking a run at its old high of 20,000 because of all of the money is being created by QE. There's so much cash running around that you need a it needs to go someplace. Even non-existent assets like Bitcoin keep selling short. All US dollar rallies, its yield support is gone forever. Here's the UUP, the US dollar basket. It's been dying a slow death all year. We've been selling here, here, and here, and we're going to sell the next rally, and after that, it's bombs away. Your European vacation is about to get a lot more expensive. Here's the Aussie dollar. That's our favorite long-term play, and we originally started recommending the Aussie down here at 50 cents, 52 cents, sorry, 57 on this chart. At intraday, it did get down to 52. And we've made it up to 72 so far. We see Australian dollar eventually making it to 1 to 1 to the US dollar. That's another gain of about 40% from here. So buy the Australian dollar on all dips. The Aussie is really a call option on the recovery of the global economy, which we know is going to happen. Energy, that short-term vaccine rally here, but you want to sell into that. Reviving global economy means there will be greater demand for Texas tea, but any rally will be short-term. Saudi production increases will cap any oil rally forever. Saudi's in the process of getting out of the oil business themselves because they know there's no future. Much of the lost demand is permanent as the U.S. economy restructures to a less transportation-oriented economy. Bill Gates is predicting that 50% of all business travel is gone forever, and 30% of the home office workers are there for good. They're not going back to offices, therefore don't need to commute and burn gasoline. So avoid all energy plays like the plague, could drop by half in the coming recession. Okay, there's our oil chart. This is the chart for the last 6 months. We only play this from the short side. We got a sell here and a sell here. And sometime next year, overproduction, partly generated by massive tax subsidies, will take oil back to $10 a barrel again. Got down to negative 37 in the fall. Here's the 20-year chart, and you can see the downtrend here. Higher high in 2008, followed by lower lows in 2011, 12, 13, and 14, and then a lower high here in 2018. Again, eventually we hit $10. Avoid energy like the plague. Precious metals we love for the long term, and that's a picture of me in the Istanbul gold market doing some Christmas shopping back in the days when I could still travel. Any declines in gold will be temporary as QE demand continues. Long-term bull trend still lives. Traders are now shifting to silver as an economic and industrial play. Near zero interest rates and a collapsing US dollar is a great incentive for gold. Copper is also seeing multi-year highs on a recovering Chinese economy. Buy this dip in gold and precious metals. You might throw a few commodities in there also. Here's our gold chart, the GLD, and you can see we've been buying dips here, buying dips here. Took a short-term profit up here, but we're looking to buy any substantial dips. And eventually, we are targeting $3,000 an ounce for gold from in 2022. That's up from a current 1861. If you like gold, you have to like gold miners. We see much bigger gains there. Gold miners rise at about 4 times the rate of gold. So you want to be loading the boat here. We've been in there since 16, buying here, and again, we're looking for a double in 2021 in the GDX. Barrick Gold, if you love gold miners, you have to love the world's largest gold miner, and that's Barrick Gold. Again, we've been buying this since 2015, bought the last dip, got a double on that, and we see $50 an ounce, or $50 a share in gold by 2021. If you like gold, you like silver even more. We've had major moves here from $10 an ounce all the way up to 27, and we are targeting $50 an ounce in silver by 2021. I just took profits, short-term profits in some of my silver holdings today, so I have dry powder to buy on the next dip. There is another alternative investment opportunity out there, and that is another future trillion-dollar company, and that is Tesla. Battery costs have dropped by 80% over the last 10 years and will fall by another 80% over the next 10 or 2 years if solid-state batteries can be mass-produced, as Tesla is targeting. There's a second factory under construction in Shanghai. It'll take production from 400,000 to 550 by the end of 2020. A third factory in Austin, Texas, and a fourth in Berlin, Germany. That takes production to 1.1 million units by the end of 2021. Data collection is worth more than the car. That is allowing them to produce an $8,000 autonomous driving product that will go with every car. And that is pure profit. Doesn't take much to create additional software sales. It's like the marginal cost of production is zero. US electric car sales have risen from 0% 10 years ago to 4% of the market today, and will soar to 100% in 20 years. Tesla's already outselling all premium car brands in the US combined, including Mercedes, BMW, Audi, and Jaguar, and they have a 10-year head start on the technology, so the others can't catch up. Many countries and US states have banned internal combustion engines by 2030 or 2040. Tesla is already the world's largest car company by market cap at 450 billion. Make that 500 billion. I have to update it to today, and it could grow another 5-fold from here. This is the design of their super high density battery, which will increase battery output by 20 times, and that'll allow Tesla to cut their car prices to about $25,000, making it the world's cheapest car. That's how they get to 5 million cars a year. We've been in Tesla since it was $3.30. That's after the IPO busted. Since then, the shares have gone up 155 times. Our last big buy was at $180 a share split before the split. So you can see we had a buy here, a buy here, a buy here, and we went over $500 a share just yesterday. We're targeting $2,500 a share by 2025, or a 5-fold return. This is my latest Tesla. I've had 3 of them already. This is the 162,000, fully tricked out with the ludicrous mode. Warning, if you are going to go from 0 to 60 in 2.9 seconds, bring lots of air sick bags from the airlines, because your other passengers may get car sick, and you want to keep that new car smell. I'm a combat pilot, so of course I'm immune to car sickness. My kids, not so much. This is my first Tesla. I was going to donate it to the Smithsonian, but a drunk driver in a GM Silverado had other ideas on a Christmas Eve, totaled the car, and I used the opportunity to take it to a shop and completely strip it down to the bone. A lot of people talk about Tesla. Very few have taken them apart. You can see here the 1,100-pound battery pack underneath the back seat. In 5 years, that'll be a 60-pound battery pack, which gets you a 400-mile range. And here are the carbon fiber wheel wells that make this the safest car in the world. Yes, I walked away from this car accident with no injuries whatsoever, except wounded pride. I had to drive a Kia as a replacement for 2 months while they got me a new car. Don't play with matches. You can probably do okay just buying all the stocks I mentioned above and forgetting about them. However, the reality is that conditions for these companies change every day. They are all viciously competing, trying to put each other out of business. If you don't get daily updates on the fundamentals, you could easily get wiped out. Today's big winner could instantly become tomorrow's loser. That's why you need someone like me to guide you through the thicket and avoid an out of the blue blow up. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And that's me struggling to smile while sending a trade alert from the coast of North Africa, and it's 120 degrees. Ouch. The harsh truth is you really need my help. The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that problem is to get educated yourself. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why do dead people do so well? They never sell. Yes, when the market goes from 600 to 12,000 and then 30,000, never selling is a pretty good idea. This is the last broker I spoke to, my friend Pinocchio. I don't really take his investment advice anymore, nor do I pay him any commissions. You really need a pro to guide you through the market maze. The market is not monolithic, and 95% of it can be completely ignored. There are a few great sectors out there and a lot of awful ones. You can earn 10 times on the great ones, and you can get wiped out by the losers. Let a 50-year veteran like me steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. This is my secret weapon, my Mad Hedge Profit Predictor. That is a market timing index, an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum indicators 30 times a day. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. You're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. I'm not the only one using algorithms. I was walking on the Miami waterfront last year, back when I could still travel, and found this super yacht called Algorithm. Some 80 to 90% of all current trading in the market is algorithm driven. This is what our algorithm typically does in a normal year. We get lots of buys, lots of sells, room for plenty of round trips every year, and it generates spectacular performance. This is our audited financial performance over the last 11 years. We have averaged 37.24% a year, and that is 2 times the return of the S&P 500 with a lot less volatility. The worst we ever had was a 12% drawdown in 2020 when the pandemic crash happened. We were only down 12% down. The market was down 40%. And most of the time, we're only down about 5%. It's so small, it hardly registers on this long-term chart. Bill was a struggling tobacco farmer in Virginia who wanted to supplement his fading agricultural income. After making $3.4 million trading with me, he still farms, but now he's growing grapes in California's Napa Valley for the high-end wineries. Philip was tired of working in the boom and bust of the oil and gas industry in Texas. After doubling his money every year for several years, he now earns a generous living as a full-time trader. And Jackie was a hospital administrator who turned $50,000 into $2 million with the help of me, and became a major player in technology stocks. She retired in her 50s and now lives a life of leisure. So what do we do about all this? Well, stocks, you want to be buying dips. Bonds, you want to sell rallies. Commodities, buy dips. Energy, just forget it even exists, stand aside. Currency, sell any and all US dollar rallies. Precious metals, you want to buy the dips. If you were not up 54.54% in the past 12 months as I was, you were reading the wrong newsletter or following the wrong trade mentoring service. And that's our updated return to today, 58.48%, trailing 12-month return. We are right here at all-time highs. Major recover from a 12% loss in March and April. We've actually made about 70% off of that low. And again, these are all daily audited financial statements. And there's our long-term return. When you get those kind of numbers, you can do things that other people don't get to do, like take the Queen Mary from New York to England. Once you get to England, you get to take the Orient Express to Venice, caution, every dinner is black tie, so make sure you pack along 2 tuxes for that part of the trip. And when you get to Venice, you can go island hopping on your own personal helicopter. Saves a lot of time waiting in lines. Here's the very long view, and this is really the most important part of this presentation. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones, as a global demographic wave brings on a new golden age. 85 million millennials will become the big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that will last another decade, starting in 2021. And that's me watching people come down from the top of the Matterhorn from my chalet in Zermatt. This is what the Dow average did from 1982 to 2000, up 20 times in 18 years. All I'm saying is that there's going to be a replay of exactly that kind of move in the future. If you take that kind of return and you start with the bottom of 2009, that gets you to Dow 120,000 by 2027. And if you think I've been smoking California's most popular product, look again. We've already done half the move. All I'm saying is that the market continues for another 10 years what it did in the last 10 years. We got a fourfold return here up to 30,000, and we're going to get another fourfold return in the next 10 years that takes us to 120,000. And when I mentioned these numbers to Warren Buffett, one of our subscribers, he said, "Why are you being so conservative? We can actually make a lot more than that." Yeah, if I'm wrong, it won't be 120,000, it'll be Dow 200,000 in 10 years. Except this time it's different. We have a tech turbocharger that didn't exist in the 1980s. Technology is hyper accelerating on all fronts simultaneously, and the pandemic has greatly speeded up the rate of change. The development of functional quantum computers means that computation ability is about to increase a trillion-fold at no cost. The world's major computational challenges will shortly be solved, such as weather forecasting and cancer cures. All major human diseases will be cured within 10 years. Live another decade and you'll have a shot at living to 150. Needless to say, tech and biotech stocks dominate in this scenario and will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheap operating software, and the new internet. The 2020s will have 10 times this number of technology drivers. And this is a quantum computer that operates at something like minus 250 degrees below zero, but has a trillion times more computational ability. So who will show you how to play the next 95,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 58.48% in a year. Follow my research and market beating trade alerts and you will rake the profits in. Let a Marine combat pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical month. We did 11 trades, 10 made money. We bought the S&P 500, sold short treasuries, bought the Russell 2000, bought Amazon and Apple, bought Biogen and then stopped out of it quickly. We stop out of losers very fast because we know 90% of the time the next trade is a winner. Then we bought Palo Alto Networks, sold the yen, sold treasuries, bought SPYs, and bought gold. Just a matter of time before technology and biotech stocks break out again to new all-time highs. Watch this space melt up going into the end of 2020. Get ready to start wheeling in those whoppers with Global Trading Dispatch as your guide. And yes, that is a 24-inch rainbow trout, which I caught in northern Nevada. Here's how it works. We saw a setup a few years ago in Micron Technology, so we set up, got a buy signal from our algorithm. So we sent out a trade alert, which looks like this. Buy Micron Technology at 42.01 or best. It was an opening trade For a $10,000 exposure, you needed 238 shares. In 15 days, we got a 15.63% profit. So we sent out another trade alert. It said take profits. It says sell Micron Technology at 48.58 or best. And on that $10,000 investment, we made a profit of $1,563. These are some of our big winners of your NVIDIA up 900%, Lam Research up 77% in 10 months, Baidu up 2,240%. With my global trading dispatch service, you get a daily research newsletter, an instant trade alert sent out at market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly strategy webinars with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world when the economy recovers, and more educational videos and webinars you consume in a lifetime. Access to a 13-year database. I'll even give you the name of a surfing camp in North Africa, which has a seniors division. Warning, it's a lot harder than it looks. This is why I'm not going to charge you for this service. I'm not going to charge you $100,000 a year. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $10,000. That's what I charge my concierge clients who get my personal cell phone number so I can be their investment 911. And I'm not going to charge $5,000. That's what I charge my advanced options trading clients. And I'm not going to charge $3,000. This is the cheapest price on my website and the lowest I have ever offered. Creating this product cost me millions of dollars. With the best customer service in the industry, running it costs millions more. Here's the offer you can't refuse. 6 months for just $997. That is a 66% discount to the website price. Just click on the link in the chat box on the right. That will take you a dedicated sales page, only open today, where you can buy the service right now. It's a limited time offer. We only take 25 new subscribers at a time. It's first come, first serve. I can't wait to make you a top drawer trader. Click on the link on the chat box on the right. Let me make the money for you to pay for your own subscription. You make the trades, discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. 6 months for just $997. Click on the chat box on the right. We're only making this offer right now today. After this webinar, it'll be open for about 10 more minutes and then it's over. Buy now, you'll get my special Mad Hedge Armageddon report, stocks to buy at the next market bottom, then forget about for the rest of your life. And if you buy today, you will instantly receive a trade alert with an extremely high probability of success. You can execute immediately and make some of the most serious money in your life. Don't leave good money on the table. And again, 90% of these trade alerts make money immediately. And just to tease you, I will show you the chart of the trade alert. I'm not going to tell you if it's a buy or a sell. For that, you have to buy the service. You have to go through 1,000 charts to find one this good. Let me do the heavy lifting for you. So that's it. This is the offer you can't refuse. 6 months for just $997. And let me take a look at my email inbox and see if we've got any orders yet. And the answer is yes, we do. We have Bill from New York City just signed up. Bill, thank you very much for coming in. I promise to work hard and earn your money. We have Mary from St. Paul, Minnesota. Thank you, Mary, for coming in. I promise you will be happy you made this decision. We got another trade alert here from Roger from San Diego, California. Thank you very much, Roger, and welcome to the club. Okay, well, a whole bunch of orders have just come in. If you're sitting on the fence just thinking about it, you better get your order in right now, because I can see we're going to hit our 25 limit in the next couple minutes, and after that, the store immediately shuts down. Okay, we have here John from Tacoma, Washington. Thank you very much, John. I know you get a ton of rain up there, so it gives you even more time to do trading. Remember, you don't have to have any previous experience in the markets to take advantage of the service. All you need is a online trading account, a computer, and the ability to turn it on. It really isn't that hard. We try to idiot-proof the trade alerts as much as possible, so even I can understand them. Okay, a lot more orders have come in here now. We have Jim from Dallas, Texas. Thank you, Jim, and I guarantee you, you'll earn enough money to get a great steak dinner at, what's that steak restaurant in Dallas? I forget the name of it. Was there a couple of years ago. Okay, another order here from Jill in Chicago, Illinois. We have lots of female subscribers. They seem to do better than the men for some reason. Maybe it's because they have more discipline or more patience. I don't know, but welcome to the club, Jill. I look forward to working with you. And you should already have the trade alert in your inbox. Go out and execute that first thing tomorrow morning and make yourself an instant winner. Okay, we have here Jose from Miami Beach, Florida. Thank you, Jose, and thanks for joining the club. Another one here from Kansas City, Missouri. We have it from let me go down and read this here. We have a Tammy in Kansas City, Missouri. Thank you very much, Tammy. Welcome to the club. Here's another one from, let me open this up, from Caroline in Oklahoma City, Oklahoma. Here's another one from Catherine in Houston, Texas. Let me open up another one here, and that is from Doug in Bangor, Maine. Okay, I can see we're almost at the 25, so I'm going to leave this webinar open for a few more minutes just to leave the link to the sales box open. And that is pretty much it for today. This is John Thomas, the Mad Hedge Fund Trader, signing off for now. Good luck and good trading. And I look forward to working with all 25 of the new subscribers. You should get your trade alert immediately, should already be in your inbox, and you'll get the first newsletter first thing tomorrow morning. It's a fully automated system, so you're already in the database. So again, thank you very much. This is John Thomas signing off for today. Good luck and good trading.